Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Today is Tuesday, December 8th of 2020. Let's talk about three topics that are moving markets, what markets are paying attention to, so we are too as it relates to our clients here at Blanke, Schein Wealth Management. Thanks for watching. So there you have it. From the start of this year to last night, we started this year well on our way. Great year economically speaking, globally speaking. Then the world gets hit with the coronavirus, and specifically, we started to fumble our way through getting the world coordinated together on the medical community side, dealing with the vaccine. But as I stated early on, especially in March, April, and May on my daily updates, we will see the world is working together. And I said I would not bet against that simply because we've never seen the likes of this before. What I'm referring to is Margaret Keenan, a 90-year-old grandmother whose Irish grandmother in the UK got the first out-of-trial vaccine last night overseas. So the world's watching. We saw that probably on your daily news headlines because it was very important. Markets are paying attention to this. They're already pricing in sort of vaccine outcomes going forward. And keep in mind, this is just one of the vaccines that's out there. As I stated before, there's multiple shots on goal. But I think markets are also taking a look at this. Not only is it a huge, huge, unbelievable victory for the medical community and science and technology coming together in less than 9 months, and rolling this out, which is extremely critical. But going forward, what we've learned is how a coordinated effort like this, usually it would take 2, 3, 5, 10 years. I mean, when we first started reporting this on a daily basis, as we've all learned, it might not be for quite some time. And that was the early fear back in March, April, and May as we started this. But as I kept reporting, again, I said do not bet against not just the United States in working on this, but the world, medical and technology and medical professionals around the world on a coordinated effort. We've never seen something like this before, and I think markets are paying attention to it. That's why we've seen, positive November by plus 10% on all indices, and it's carrying over in the month of December because we're pricing in. Markets are future looking, and so they're pricing in a post-COVID world. Ultimately, not only that, but think about this. Number two is they're also thinking about the science and technology that was pulled forward this year as to how we deal with coming up with the formulas now on the COVID, things that are out there on a go-forward basis, all these viruses. I think we've really unlocked that. I think markets are paying attention to that because markets are forward-looking, forward pricing, and it's just beyond the 2020 COVID crisis. It's looking far into the future right now and saying, wait a minute, what we have done from a science, technology, and medical standpoint, we will look back in history. We'll show we not only have one, we have 3 vaccines right now, but it's been never been done before. So that's a positive on the front of humanity. President Trump today is going to sign an executive order for the U.S. government to have sort of a first take as it relates to those companies, meaning that the companies that came up with it, U.S.-based companies, can't go and sell them to other foreign nations first before the United States, simply because we started the program here and put the resources and energy, and some of the U.S. companies had the first take, so we get the first look. So that's another positive that the market's looking towards. But all in all, anywhere from Margaret, 90 years old, being very public about taking and very excited about taking the first vaccine, I think that's a great step for humanity today, and we should all celebrate. Another interesting positive development in the last 48 hours is there's increasing talk that we might get a stimulus CARES 2.0 Act. It might be small meaning $900 billion. But it might happen between now and Christmas. The reason why I actually am having a shade of optimism here, because I haven't for quite some time. In fact, if you follow me on my daily updates, I've been consistent on the fact that we would not have a CARES 2.0 Act because they would agree to disagree well into 2021. And I'm still sort of sticking to that. But the one caveat here is interesting, is that the Republicans backed away last night, actually earlier today, on the liability protection blanket clause within. That's very key. Republicans were very, basically that was a deal breaker from day one. And that language has now been removed, and they've been open to discussion. Now, they also said that state and federal aid for the state and local municipalities need to be kicked off into 2021 discussions. So what this really means is if Congress comes to terms on the $900 billion deal right before Christmas, so I think they all need this. I think more importantly, the small businesses and the unemployed need that the most. So they need to actually get aid to those that need it. Sooner than later, this can't ultimately wait. So I think they know that, but I think they're removing language to then fight a new fight when we have a new Congress, ultimately a Senate set up in 2021. So that just sets up for another CARES 3.0 stimulus package. So it's interesting development. That means not less, but ultimately more stimulus into the markets. Markets are paying attention to this, and that's why we're seeing markets up. Finally, the last topic of the day are small caps and NASDAQ. NASDAQ had a 3-month consolidation. Those are the large technology-based companies that are listed on the NASDAQ exchange itself. That 3-month consolidation, we just saw leadership now continue and carry on and break out. So NASDAQ, we're seeing some positive movement onto the upside. So we could still continue to see that probably between now and year end on large, big tech companies, because that was just a recent breakout after the 3-month consolidation there. And also small caps. Small caps are very interesting. Not only are we seeing sort of on the bonds in some of the high distressed areas of the market, think consumer discretionary, specifically travel. Those bonds have gotten better in terms of the CDC spread. So the spreads have come in. That ultimately means that the bonds have a higher probability of paying off, or the risk has lowered, at least at this moment in time. But that trend has continued, so the spreads are coming in. Why we look at the fixed income market, specifically those that are high risk, is because it also has an indication, broader indication as the market at large. And then we're seeing that translate over to like the NASDAQ and more importantly, the small caps, because those are the more vulnerable as a smaller company. Relative, more economically sensitive, if you will. And those have broken out to the upside relative to performance to S&P 500. Again, even beating the S&P 500. And if you remember, the Dow, S&P, and NASDAQ are all now hitting record intraday highs. So the trend is our friend as it relates to the markets. We could see a Santa Claus rally. Thanks for watching, and we'll catch up next time. Talk to you soon.